All right. Today the market was closed for holiday, but tomorrow we will start trading again. So let's do a quick look at the market from Tuesday's close. And we can see here SPY was up 0.25%. We did get the close above 547, which means we are likely going to 550. And then once we get to 550, I will warn you once more, this is going to be an opportunity where smart bulls will likely start selling, and there likely will be smart bears getting those low risk short entries. But keep in mind, low risk does not mean you are going to profit, especially when you're shorting a bull trend. But because it is low risk, there will likely be people trying to short this market. And if we do break through 550, it is possible we short squeeze them, and then we could go to that next level higher at 555. So I'll remind you once more, this is a bull trend until it's not. And if you are trying to call a top, it is a very dangerous game, because in a bull trend, once we do start getting a pullback, if you just assume the market has topped, you are guessing. It is more than likely in a bull trend, we're just going to make higher lows before the next higher high. So even though I am expecting a pullback, there's nothing that says after that pullback that we can't continue to go higher. So just keep that in mind. And if you are accumulating short positions because you think the market is topping and it's going to go a lot lower, that is a very dangerous game. And a lot of bears have been playing that game going all the way back to 2023, and they are now sitting on massive losses. So just be aware that no matter what trades you are taking, even if you're going long up here at these overextended conditions, you always need to manage risk. So I don't care if you want to short or if you're going long, you need to manage risk no matter what you're doing. And the critical risk level for the bulls will be the 5 EMA on the daily chart, which is also going to be right around 547. And for the bears, you need to be using this resistance level up here at 550. On the NASDAQ 100 triple Qs, we had a very flat day on Tuesday, only going up 0.03%. We're still outside the upper Bollinger Band, and we are still closing above 484. So if we continue to go higher, it is possible we go to 488 to 489. But I will remind you, if we start to get the rollover and we break down below the daily 5 EMA, that is going to be a breakdown below 480, and that could mean we come all the way back down to this gap fill here at 468, and that is an all-time high gap, which means that gap is very likely going to fill, and it is very likely going to fill before the end of the month, in my opinion. So I still do think it is a very low risk short opportunity up here. But again, it is a bull trend, and in a bull trend, it is very risky to hold short for too long because the trend is pushing us higher. So just keep all of that in mind and manage your risk right around 484. If we start to break below 484, I do think we'll see more selling pressure and more bears stepping in, trying to drive us down to fill the gap at 468. Also keep in mind, once the price action rolls over, it is also going to be difficult for the bulls to see a great buying opportunity, which means they may also lock profits on long positions, so you may get double the selling pressure here. On the Dow Jones, we were up 0.14% on Tuesday, and we still have this head and shoulders possibility because we did not break down below the neckline, which is going to require a break in the price action below 384. And the bulls need to get a higher high breakout above 391. So I still view the Dow Jones as a trading range between 384 and 391. The bears will be winning below 384 and the bulls will be winning above 391. So let's wait to see which price action breakout we're going to get and then trade it accordingly. On the Russell 2000 IWM ETF, we were up 0.17% on Tuesday, and we are finding resistance right here at this negative 5 EMA. We still have the bear trend, and we are going to be in a bear trend below 203 or the breakout above this previous high right around 206 to 207. So it is possible you could just stay risk off until the bulls prove the bullish price action breakout. But if you do want the low risk bull entry, that is going to be down here between 198 and 199, and then just get risk off if we break down below it, because we're likely going down to 195 and then 193. So this is a trading range right now between 198 and about 203. The bulls need to break resistance and the bears will want to break support. On the ARKK ETF, we were down 1.02% on Tuesday, and this is still a bear trend. As you can tell, we are still getting rejected at these moving averages. They're all negatively sloping, and we're still in the risk off territory below 45, so there's no reason to be bullish in this ETF just yet. On the VIX, we are still trading at this very strong support down here right around 12, and I do believe we're going to see a lot of volatility coming very soon, which is going to at least push the VIX higher towards 15, and I think we should see the VIX even higher than that. But let's wait to get confirmation from the price action, and keep in mind, while the VIX is down here near 12, you can still get very cheap hedges. On Bitcoin, we're currently trading just above 65,000, and this is still no man's land, in my opinion, between 64,000 and 67,000. The bulls need to break above 67,500, and the bears need to break down below this support at 64,000. If the bears break 64,000, that is extremely bearish, and that means the bulls could not show up at support and push us higher. But it does look like so far the bulls are showing up at that support. We have held that support once before, so if we can bounce off 64,000 and break out to a higher another high above 67,500, it is possible that we're right back on the bull, but we do have a confirmed double top while we're trading below this neckline breakdown at 67,500. So do keep in mind Bitcoin is still looking risk off below that neckline. On Nvidia stock, we're up 3.51% on Tuesday, and we did hit that price target up here at 135, and above that we could start running to 140, and we did close above 135, so it is possible we still can push a bit higher. But I will warn you one more time, this is looking like a blow off top with 3 unfilled gaps in this very parabolic move, and it does look like we're near the very late stages of this bull rally. And while I do love this company and I do love what they're doing, I cannot deny the fact that technically speaking, this looks like we're due for a very sharp correction. So just keep that in mind. We have not broken down below the 5 EMA, which I do believe is going to be the sell signal. So at this point, the sell signal in Nvidia will be the breakdown below 131. So if you want to stay bullish while we're above 131, that's completely fine. But if we break down below it, look out below, because below 131, we will likely fill gaps below 127 and below 117 and possibly even below 107. So keep all of that in mind. There's nothing that says we need to sell it yet, but it could be coming up very soon and right around the corner. On Tesla stock, we were down 1.38% on Tuesday, and we are getting the bull trend yet again. We did get that successful bounce off of the support zone between 167 and 173 that I told you was very critical, because if we broke down below that, we'd be in a bear trend. So the bulls did everything they needed to do. They bought up at the support zone. They pushed us all the way higher above the resistance at 180 and now 185. And if we can continue to hold above 185 and maintain this bull trend, I do think we're well on our way higher towards the price target at 207. On the way there, do look out for this resistance right around 197. On Apple stock, we were down 1.1% on Tuesday, and we continue to see rejections from this resistance and the price target at 218. And if we break down below the daily 5 EMA, which is down below 212, it is possible we come all the way back down towards this lower support, which could include a retest of the all-time high breakout at 198. On the break below 212, we're looking for support right around 208 and 204. So jumping back over to the S&P 500, keep in mind this is a market that's getting a bit overextended, which could be due for a pullback. And while I do think it is very low risk to short from these resistance levels, that doesn't mean it's going to work, and it doesn't mean you're going to win. And long term, you do not want to hold short in a very strong bull trend. So just keep all of that in mind and make sure you're managing risk. Even if you're going long up here at these levels, just because it's a bull trend doesn't mean you have no risk. You still need to manage risk. And if we start to break down below support, that means the bears are taking over, the sellers are in control, and we could be going lower. And then once we start going lower, pay attention to the volume and the price action. And if we start to get high volume selling, don't be in a hurry to catch a falling knife. It does not matter if you're going long or going short. It matters that you're managing risk around critical levels. And as long as you're managing risk, you do not have to win that many trades to be a profitable trader. It is only those traders who are going to let their losses outweigh their wins, or gambling in the options market, who are never going to be profitable. So make sure you have a trade plan, follow that trade plan, and always, always, always manage your risk. If you want access to all of my intraday updates, technical analysis, and my trade ideas, that's in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.